The first thing to learn in technical analysis is how to read the charts. Here we have listed some of the basic guidelines that can help you in your early attempts. When you are first analyzing a pair of a currency, look for the current trends. They have daily, weekly, monthly, because going several years back can help you gather enough data to understand how it works. Studying this data paints a clear picture of the ups and downs of the currency pair and where it is likely headed. Next, take a look at the short-term charts, 15 minutes, half hour, hour. This extra data tells us what indicators are more reliable for you. Identifying the current trend is very easy and simple. You just have to look at the chart and decide that is the graph is showing a trend that is strong and steady, or is it just for this week. Practice them so you can identify them easily and you can find the points when they change their directions. The longest term is the strongest, which is another reason to look at these charts first. Even if you are doing one-day trading, do not intend to hold your position for longer than an hour. You will do a whole lot better if you trade in the same direction in the current trend. So take the time to identify the daily charts before you begin to work. It's just like the traders say, if the trend is your friend, then you don't need to lie about it. Once you have mastered identifying the long-term charts, compare that data to what you see in the short-term charts. You will find that any number can be intermediate term and the short-term trends with the path that is set by the current trend. The graph will waver up and down, but overall it will follow the path that is set by you in the longest-term trend. Next up is to find the support and the levels, which are basically floor and ceiling points on the graph. These are the key points on the chart where the price repeatedly breaks through. Just peek through. The currency pair price will go high or low, but no further. When it reaches that point, then you have to change the direction. The more times this happens, the stronger your support will be. You have to draw a simple line, either in your mind or on the chart, that passes through mostly in the support points. Then draw another line that is passing through most of the points. This will give you a clear picture of the path of where the currency pair is going. It is called the price channel. It is a very easy and simple tool to help determine how the path will continue. When your support and resistance points are strong, the graph of the currency pair will bounce along sideways between the lines that you have made. When this happens, the currency pair is said to be in range bound. This happens 80% of the time. Usually people trade with channels without using any technique. That doesn't deliver jackpot profits either. Sometimes these lines don't have to be in level. They may be going up and down, but still moving within the channel. It's still slanted, but you can still trade with that range. When a currency pair breaks out of the price channel, it falls back into the channel again. And in that time, it gains some momentum and keeps on moving. This is called the momentum market. It is the other way to trade as well. To do that, set an order for the price to break out. It's up to you. Set it high or low, then just sit back and relax and let it flow. These are some real facts about how to read charts and turn a profit. You should now have an understanding of the full importance of the basic technical analysis.